So here's the portfolio I've created. It's only 7 stocks, so I tried to keep it fairly simple in terms of numbers because I have to be keeping track of it. And then at the same time, I tried to make it as diversified as possible. So my first stock that I bought is Berkshire Hathaway, which it's basically an index fund, the way they run it, only it doesn't usually invest in technology. And the reason why I invested in Berkshire Hathaway is because, like, some people say that Warren Buffett is getting old, but, like, he doesn't really run it. Like, he has managers who run it. And so right now it hasn't gone up in a while. And so usually it does that and then it goes back up. And so since I'm holding this on for like longer than 6 months, like that's the rule. So I can't very well sell it before that. So I'm hoping for a long-term gain on that one, as with pretty much all of them. Then next we have Chevron. And the reason why I bought Chevron is because Trump just signed an executive order pretty much saying that the oil companies can now drill in a lot of places where they can't before. And so I feel that there's going to be a lot of deregulation, and oil companies like Chevron are going to do well. At the same time, I feel that Chevron's the strongest among oil companies because right now there are some other companies like ExxonMobil that have worse financial metrics. Like, it seems like Chevron is showing the most potential for growth and the most growth-oriented strategy. Next, I bought the Kellogg Company, which is just a general, like, sort of retail, like food corporation, agriculture, then to transitioning to retail. And so the reason why I bought that is it's kind of one of the staple stocks on the market, and I feel that, like, if you look at the chart, well, what happened to their chart? Oh, here it is. It's been going down, and I don't really see why, because I feel that, like, nothing abnormal has been happening in that industry. And generally, when companies have a lot of money like that, they find ways to branch out and go into expanding businesses and make a lot of money. So I just feel that Kellogg is kind of underperforming in that maybe it's just a lack of interest with the investors, like other stocks are more popular, and that it'll come back and go up. And so it looks like my stocks are actually shuffling around. But here's Macy's. I bought that just because it's like a standard retail store, but it's kind of in a different market category than something like Kellogg, because Macy's would be like a retail store that Kellogg sells to, and then Macy's is kind of like the middleman in that regard. So as you can see here, if I look at the 3-month chart for Macy's, it's sort of been tumbling, and if you look farther back, it was really doing quite well, like stock-wise, and I think a lot of people fear that Amazon and online businesses are gonna take over companies like Macy's. However, I don't quite think that that's something that really needs to be worried about at this point, because Macy's is known for having a strong website, and I think they'll just sort of merge more into that business model as things progress. Was I logged out? Oh no. So then, let me see, what else do I have here? I have Pfizer Incorporated. I don't really know how to pronounce that, but pretty much this stock is a pharmaceutical. And there's a lot of small cap pharmaceuticals out there, which I actually think are pretty cool, but they're really risky. And so this one's just kind of a growth stock because it's kind of one of the biggest pharmaceuticals. Like, people always talk about like failed big pharmaceuticals like Valiant, but this one's really been around for a long time and it's pretty solid. So I feel that the stock is probably going to go up because, as you can see on this chart, it's sort of been steadily increasing. And the reason for that is they just keep developing new drugs, and then with the proceeds of that, they just keep building. And it's really an emerging market, even though they're already such a big company. Generally, the trend is like when you're a really big company in kind of a developing market, then you have the most resources to just continue making a big profit. So that's why I bought Pfizer. Also had better financial metrics than some of the other stocks. But I'll get into those metrics in another video. And then, let me see, it shuffled these around. Oh, the last one is this bond fund. They always say put bonds in your portfolio. So the idea is if stocks don't do so well, then your bonds will be there to support you. So I guess the thing with this is when interest rates go up, then the bond price should go down. But when interest rates go down, then your bonds from old are worth more. So it should go up if that's what these guys are investing in. I'm pretty sure that's what they're investing in, because it says they invest in 10-year treasury bonds. But I didn't really research this one that much. It's just like you're supposed to have bonds in your portfolio. Actually, it's kind of interesting because it's the only one that went up today. Where is it? Yeah, there it is. It's the only one that went up today. Wait. No, it's this one here. Percent profit loss. It's the only one that's gone up. Not that that really matters in the long term. Now, with short term, I haven't really bought anything because I spent the day picking my stock portfolio for the long term. But I did make an order for this stock that went way down, and then like it dropped like 90% in a day, and then it like went a little bit up afterwards, and I was trying to get low, but then like I made like a market order, and like it didn't go through. See? So that's pretty much what I did today, and tomorrow I'll post another update.